Mortgage bonds have been bouncing all over. They were up 75 basis points. They were down. Now they're back up about 14 basis points, but it'll change in a minute. There's high volatility as it's tough to get some liquidity out there. It's difficult, especially when you're trying to go in any area above par. It's just not out there because there's the fear that these high yields will be refinanced. So why pay a premium when those loans are going to be cashed in the not too distant future? It makes for a very difficult situation for all of you, I'm sure. Now, let's take a quick look at the charts here and see where we are. Now, we've been saying to you that mortgage rates, they're going to follow inflation. And so as we start to see better inflation, and we'll see things begin to calm down and settle in. Unfortunately, it is still very volatile right now. We're up 23 basis points. Yeah, but it's been all over, as I mentioned. You can see the wide range here after yesterday's big downfall. Now, this is exactly where mortgage bonds are trading now. We need to get over that first hurdle, which is this level of resistance. And then there is a little bit of an upshot here that we can recover some pricing. Now, I would have actually have hoped for prices to open lower. When you look for a reversal after a big down day, when you want to see that finally things turn around, you need to see an open lower. I know it's painful initially, but then prices improve throughout the day and you get a bullish engulfing pattern or a bullish piercing pattern. And that tends to lead the way out of this. We don't have this yet, but we are hopeful that maybe we could just break above this level of resistance. And then there is some ground that we could see some interim improvement in where we are right now. Listen, team, I know that this is gut wrenching for you. It's no fun for us either, but we just have to kind of navigate these waters. And eventually, as inflation does come down, which I mentioned, it will, you're going to start to see things improve. Speaking of improvement, though, Dan, the housing market has been so, I guess, the target of so much negativity. But when you took a look at the numbers that we got on the new construction side, it was quite a pleasant surprise.
Way better than expectations. This morning, we got new home sales, which was signed contracts on new homes in the month of August. Let's take a look at some of the numbers. And when we do, you can see that the annual pace moved up from 530,000 to 685,000. That's an increase of 29% month over month. But if you look at the July number, it was actually revised positive. So when you look from the originally reported number, it's really up about 34%. Now, when you take a look at the inventory picture, which I think this is the real story here, there's 461,000 homes for sale. And at that sales pace and the inventory figure, there's an 8.1 months supply. But the key here is that if you look at how many homes of that 461,000 are actually completed, it's only 49,000. And if you take the sales base of 685,000, you divide it by 12, it's about 57,000 homes per month that are sold. Well, your actual month supply based on completed inventory is only 0.86. So really tight market. And I think the story also is on the existing home market because people are not selling their homes as much now because they don't want to move into a much higher interest rate. So what option do they have? Their option is to look in the new home market. We also saw the median home price decline a little bit over 6% from last month to 436,800. Now that's still up 8% year over year, but this likely speaks to the mix of homes that sold and dragged down by potentially some lower priced homes selling. Maybe there's some more introductory level homes that people took advantage of.
And we did get appreciation with the Case-Shiller Home Price Index report. This is for the month of July, and this is the gold standard on appreciation. And it was down 0.3% month over month. But let's dive into what the media is not going to tell you. Now, we are up still about 16% year over year, but here's the thing, team. This decline is really in these major cities. This is not widespread. When we take a look at, for example, South Florida, that is still zooming higher on appreciation.
We also got appreciation data from FHFA, their house price index for the month of July as well. And this measures appreciation on single family homes with conforming loan amounts. And we did see month over month, it was down 0.6%. And year over year, it's still positive 13.9% from a previous reading of 16.2%. But we are still seeing a healthy market when looking at data that we got from Black Knight on delinquencies. This is for the month of August. And anything 30 days or more delinquent but not in foreclosure, we're seeing a delinquency rate of 2.79%. And this is near the all-time record lows that we're seeing.
And for news, tomorrow we'll get pending home sales at 10 a.m. Eastern time. On Thursday, we'll get the final reading on Q2 GDP. And on Friday, we'll get the Fed's favorite measure of inflation, PCE. We've also posted a new Social Studio script regarding the recent Fed hikes and what it means for housing. So be sure to check that out. And with that, we'll begin the day carefully floating.